For the Street in New York, I'm Jill Malandrino along with Mike Cohen. Together we bring you the trading week ahead, and the earnings calendar is relatively quiet next week, but we do have a couple key things we want to take a look at. Of course, the FOMC meeting and the announcement Tuesday and Wednesday of next week. GDP, housing data, hundreds of companies are reporting, and of course we have macro headlines to contend with as well as commodity weakness. But Mike, everyone's favorite trade to watch, Twitter on Tuesday.
Yeah, that's going to be pretty interesting. I mean, when you take a look at both Facebook and Twitter, you know, we were mentioning this before, but basically as MasterCard and Visa are to American Express, so Facebook is to Twitter. But I am inclined to make a bullish bet in Twitter. I just think that the important thing is to make sure that you're short more options than you're long.
Caterpillar reported weak this week, and we saw what happened to the stock. Eaton reports on Wednesday. Are you concerned there?
I'm not as concerned, largely because the space has been so beaten up already. I kind of think like the bad news is already out, and I'm not expecting too many further negative surprises there.
MasterCard's on Wednesday as well, and that's a pretty impressive chart.
Yeah, and I think MasterCard basically has been following along with Visa's success. We saw that, you know, basically all-time highs here. I actually also expect that there has been a carry-on of that information essentially from the Visa results onto MasterCard. So I think it's probably going to be positive, but I don't think we're going to blow the doors off. Facebook's
another one on Wednesday. It's up 450% since its low in 2012. You think it has more room there?
I think it does actually have some more room. Facebook, obviously, it's got the momentum behind it. But I actually think we're probably going to see results that are an upside surprise. So I wouldn't be surprised if we see, you know, maybe 8–10% more to the upside over the course of the next 45 days.
Occidental kicks off earnings on July 30th for the energy space, and that's been one sector that's under pressure.
It's under pressure because of oil, very simply. I think this is a space you want to be hedged against energy exposure in general, and then just go ahead and do what we're doing, which is picking out the best stocks in the space and waiting for things to bottom out.
And Starwood Hotels. We could walk outside in Wall Street, and there's plenty of tourists out there. So I think expectations are pretty good right now.
There's plenty of tourists, and there's not plenty of hotel rooms. I'm in hotels a lot. I can tell you it's hard to find one, and the rates are astronomical. And of all of the big hotel operators, Starwood's the one with the best operating margins, close to about 10% net income margins there, soundly beating out other big competitors like Sheraton and Marriott. So, you know, from my, Hilton and Marriott, you know, from my perspective, I think that's the best place to be.
All right, well, we're in summer trading, but traders have a lot to contend with next week for sure. Thanks very much, Mike. For the Street in New York, I'm Jill Malandrino.